There's
Wow.
10
I just think
we
that
filled it out finally.
I just think 10. If
And
you
we
can
play
do
the Brady Bunch music.
How do you do it with 9? It's just, I mean, that's 10% more info.
I don't know. Hi, Becky.
Hi,
no, I
everyone.
gotta go look this way.
Let's get some of our other guest thoughts on this, too. Wendy, why don't we start with you? Your take on what we see here, what the reaction is going to be. These numbers are good. The Dow's gone round trip. It went down and came right back basically to where we started before all these numbers came in. But there are some numbers that are significantly off from what had been anticipated.
So what we can't see in this quarterly number is the monthly pattern, which we'll learn more about tomorrow. And we will probably see that consumer spending slowed over the end of the year. And a slowdown in the economy has been in train for a long time now, with an expected payback from very strong consumer spending on goods, the waning effects of fiscal support, the effects of monetary policy. But to be clear, the slowdown that I expect we will see, and that we are on, already seeing in the monthly numbers, the slowdown that I expect that we'll see in the first quarter is a good thing. It'll show that the economy is starting to rebalance, get on a more sustainable path, and help to ease the pressure on inflation. So a lot of that is masked in this quarterly number, which is really about, at this point, ancient history.
Yeah, and that's the one thing we can say. All of these are kind of backward-looking numbers, Michael, and almost the better these numbers are, the more potentially it can pull from the current quarter.
Yeah, I think that's right. I mean, look, we know about December. We know that holiday sales were very weak in December. The retail sales number for December showed a decline of 1.1%. We know that industrial production was down in December, that industrial production fell by 0.7%. We know that there are problems in the housing market. Why are we seeing this slowdown in December? Inflation, higher interest rates, people's inflation-adjusted incomes are dropping, and then people are facing higher borrowing costs. The quarterly number obviously looks at what happened over the entire quarter, which I think isn't the right thing to focus on in an economy that's dealing with interest rates that are rising this rapidly and with inflation dynamics that are as fast-moving as the inflation we're seeing. I think the key thing for the Fed is what Steve said earlier. We're still growing above potential, and the Fed wants to push the economic growth rate below the economy's underlying potential while keeping it positive. That didn't happen in the fourth quarter of the year, and the expectation that the Fed's going to stop around 5%, I think looks more misplaced this morning than it did yesterday.
All right, Tiffany, one more economist perspective on this. The number that you think is the most important, that you take the most away?
Yeah, I mean, I actually was struck by the consumption number. I think you said 2.1. I think that was below consensus, and that suggests to me that underlying the surface here, the details of this GDP report were actually maybe a little bit weaker. So that could suggest final domestic demand, which I think is the key number for the fourth quarter, is 1% or even a little bit below. It looks like inventories maybe have surprised on the upside. So that's actually not very good news for the forward-looking growth trajectory. And I completely agree here that the monetary policy tightening that we've gotten to date, hasn't really fully been reflected in the real economy, and that's kind of yet to come. And there's a lot of uncertainty over the extent to which we're going to get, just weakness or actual contraction and recession next year. So if I'm the Fed, I don't think this number really changes my perspective. The other thing that I would just highlight is on the inflation numbers. To your point about how the quarterly masks, if you look at just the 3-month over 3-month, we're at 3%. The Fed's SEP projection for core PCE was 3.5, so that could come down. I mean, there's some downside risk there. Inflation news is good.